Good evening, everyone, and welcome to the episode 13 of the podcast GeoFinance. Your hosts tonight, as usual, Dragan and Ivan will entertain you. We're going to discuss the thing or two about the precious metals. So, Ivan, hello, how are you doing?
Hi, I'm doing great, thank you.
That is very nice to hear. Okay, then we can start by providing some insights into the price movement of the precious metals recently and their influence on portfolio of small or big investors. It's up to you. Okay, what do you think about it?
Well, considering the current situation in the world, the current economic crisis and the coming economic crisis, I think the prices of precious metals have been very tame so far,
Mm-hmm.
in the sense that they haven't gone up that far, and I actually expect them to go up faster, but they're still up. They had a dip for a while when people had to cover their short positions
Mm-hmm.
just after the market tanked in March. But by now they have recovered and then some, especially gold and some that have been in a downward trend for a long time. Platinum, for example, have recovered as well. So or are recovering as we speak. So I think that even though they're more expensive, all of the precious metals are more expensive now than they were, say, a year ago. I think they're still a good buy at this moment because I think they're going to go a lot higher. And as for investors, I'm not sure gold is an investment or precious metals are an investment because an investment yields a dividend, yields a profit. And if you buy 100 ounces of gold, it's always going to be 100 ounces of gold. It's never going to give you a profit, but it may go up in value. And it's a real asset. It's something that cannot be destroyed. Even if your house burns down, it's still going to be there. Maybe melted, but still there. So I think it's a valid way to preserve your wealth. I
Uh-huh.
wouldn't call it an investment. I would call it a wealth preservation instrument or
Mm-hmm.
purchasing power preservation instrument.
A store value. Okay, that's good. And you're talking now about the physical gold, right?
Yeah. I'm talking about physical. I'm not talking about ETFs. I'm talking about just physical precious metals, gold, silver, platinum, palladium,
Uh,
rhodium,
oh,
whatever people consider precious metals.
okay, let's elaborate that a bit. What do you mean by physical and what do you mean by investment gold or ETFs or some other type?
Well, there are several ways that you can invest in precious metals, that anyone can invest in precious metals. The most obvious and most straightforward way is to just purchase physical precious metals. Physical precious metals are the safest bet because there is no counterparty risk. You own it, you hold it in your hands. Gold is surprisingly valuable. It's a bit strange that so many people they have gold as part of their portfolio as an ETF, but they haven't actually held an ounce of gold in their hand, and they have no idea how dense and how small it is. Uh, Gold is surprisingly valuable. You can hold $50,000 in your hand, in the palm of your hand, and in gold. Unlike silver, where you need several shoe boxes full of silver to hold that kind of money. So physical precious metals are the least risky because you hold them. You can do whatever you want with them. You can bury them. You can hide them in a safe. You can put them in a safe deposit box, although I wouldn't recommend that because then you turn an asset with no counterparty risk into an asset with counterparty risk. You don't know whether the bank's going to be able or willing to give you back your precious metals. Another method to invest in precious metals or to hold a part of your wealth in precious metals are ETFs. ETFs are electronically traded funds, and their GLD, SLV ETFs are very popular as ways to invest in precious metals or to bet on precious metal price fluctuations without actually taking delivery of those metals, without actually holding them. Because physical shipping storage, it all costs money. And by trading in ETFs, you just don't have those costs. And also, if you buy in many countries, in some countries you don't. And in the US, for example, you have there are no taxes on precious metals. In Estonia, in the EU, there are no taxes. But in most countries there are taxes. So if you take delivery of physical precious metals, you have to pay taxes. And if you trade ETFs, you don't. So that's where ETFs can provide some benefit. But ETFs, if you own ETFs and you want to take delivery of physical gold, don't count on that, because ETFs are just a betting instrument. It doesn't guarantee that you're going to get physical gold from those ETFs. So you can have millions of dollars in ETFs. It doesn't mean that you own a single ounce of gold. Some ETFs will allow large holders to take delivery of some gold, but it's risky in that sense.
Okay, so in fact, it's a very big difference, right?
Oh yeah. In terms of security, yeah, it's a very big difference. But ETFs are very easy to trade because it takes seconds. And if you want to sell physical gold, it can take days, weeks to find a buyer, find someone who is able to afford it. It's relatively liquid as far as assets go, especially in some countries. In some countries, it's a lot less so. But it's not as liquid as ETFs. And the third way to invest in precious metals is investing in mining companies. This is a relatively popular way to invest in precious metals. Currently, I would say that mining companies are very much undervalued. Gold and silver. I think these metals are going to go way up. The price of energy is down, so it's going to be cheaper and easier to mine. So I think that over the next couple of years, we're going to see a significant increase in the prices of. Some of them are large companies. Some of them are junior miners, smaller companies that are developing. Obviously, this is not investment advice. This is just my opinion, but it's my opinion that you should, if you choose to invest in precious metals mining companies, you should really do your research, because some of the junior miners, the fundamentals are not there, and for some of them are really good.
All right. We discussed some things in the previous episodes about possible relationship between the cryptocurrencies and the traditional assets. And we also mentioned some things about the possibility to use metals that we are discussing tonight in industry as well. So what do you think, because all those things regarding this coronavirus are beginning slowly to decrease and restrictions are going to be lifted soon, we hope. Do you see any fundamental change in the behavior of investors in the new understanding of the precious metals? Do you see some particular space for gold or silver in the days to come, not only as investments or storage of value, but also as some kind of industrial tools?
Well, it's not really so much the virus that is to blame. It's the central banks around the world.
Yes, of course. We said that.
These central banks are overreacting to the virus. I mean, this coming recession was inevitable. There is nothing that anyone could have done to stop it, to prevent it. And it's a good thing. Recessions are a good thing, because recessions destroy bad companies and allow good companies to take those resources and use them efficiently. So I don't think central banks should interfere, but since they are interfering and they're printing a lot of money, trillions and trillions and trillions of dollars, euros, yen are being printed, this is going to affect prices, and it's especially going to affect precious metals prices, because if you hold bonds, for example, bonds will not protect you from inflation. you're losing money there. It's a certificate of confiscation, basically, as they were called in the 70s when there was high inflation, because you get a very low yield or no yield or negative yield in Europe now, and it just doesn't make any sense to invest in bonds. Some stocks, gold stocks, will, I think, rise significantly above the stock market average, and in the stock market, it's possible that an investor could preserve some of the value of the funds that he has, but it's difficult. I don't think that it's wise to invest in tech stocks now. I don't think it's wise to invest in, for example, Tesla. Even Elon Musk said Tesla is overvalued. So, these companies, these large companies, I wouldn't invest in them. And as far as whether gold and other precious metals have a place in a portfolio of a modern day investor, I think yes. I certainly see gold, and especially gold, but also other precious metals, being an insurance policy. That's the best way to describe it. Because if you hold 10% of your assets in gold, if gold goes up tenfold, you preserved your value. If you have no assets in gold, or if you only have ETFs or something else, even if you get more fiat money, it's not going to be worth the same.
Interesting things is that actually gold is pretty in demand these days, right?
Yeah, we've seen over the last 2 months, more than 2 months, we've seen premiums rise on all precious metals, not just gold. Gold, actually, for physical, it's hovering, in theory. Spot price is hovering above 1800, below 1800. In reality, you can't buy physical for less than $2,000. And silver, it's even worse. I mean, silver now, if you go on eBay and look for an ounce of silver, it's like $25 or more. So premiums on silver are almost 100%. We haven't seen this in a long time. This means that there is a lot of demand for physical gold and silver, especially among smaller investors. There's also a reason for the current situation, in the sense that several mints have been closed for a few weeks or months due to the pandemic.
Mm-hmm.
And they couldn't operate, so obviously there's a shortage of physical bullion. But now that they're back online, I still don't see physical bullion shortages getting better. So I think we'll see in the coming month or months. By August, I think the situation should be clearer. But I think that the price of gold and other precious metals can jump a lot higher any day now. And this is a bit risky to wait to buy gold. It's a catch-22. I mean, if you can't buy it now, so you have to wait. But if you wait, it's gonna go way up, so it's gonna be more expensive to buy.
Mm-hmm. Okay, when we are discussing this surge in demand, we are mentioning here now some, so to speak, different circumstances. But if you recall, a couple of months and even years ago, some countries were really vigilant in buying gold. For example, I think that Russia, even Serbia, had a serious efforts in obtaining the gold. Can you please comment a bit on it?
Well, smart central banks have been buying gold for a while now. Since the last financial crisis, essentially, Russia has bought almost 1,500 tons of gold. So that's a lot of gold. I think China is underreporting. China is officially above 2,000 tons, but I think that they're significantly underreporting their gold holdings. Kazakhstan has been buying, Turkey has been buying, Hungary has been buying, even, as you said, Serbia, which is a small country, has been buying, but it's a tiny amount compared to these large buyers. I think that central bankers see the writing on the wall. They see that the market is over leveraged, that the many companies that issued all of these bonds and all of this, they have all of this debt. They're over leveraged. I think that they also see that countries that have a lot of debt are over leveraged. So they are doing the smart thing by buying gold. And in terms of when they stopped, I'm not sure that they stopped at all. I mean, maybe now that everybody needs money, now they're not buying, but up until a few months ago, they were buying. Russia, especially, Russia is one of the world's largest buyers of gold, but also one of the world's largest producers of gold. So they buy their own gold from themselves. And I think in Russia and in China, what people sometimes don't understand is that a lot of the gold miners are actually state owned. So the price of gold doesn't really matter to them. The workers get paid the same. It doesn't matter whether gold is worth $500 or $5,000. It's the same. In that regard, these countries will have an edge if gold goes sky high. But also, these countries have a large amount of gold stored.
Mhm.
I think that some countries are overestimating or overstating their gold stores
Why would you do that? Why would any country do that?
to as a way to pretend to be more economically stable than it actually is. For example, I'm not entirely sure that the US really has over 8,000 tons of gold. I'm very, very skeptical about that.
Okay, but is there a chance to check on it?
No, and there hasn't been an audit in over 70 years.
Okay.
They don't allow anyone in. Trump tweeted that, oh, thank God the gold is here, something like that. But he hasn't really. You have to really check, and whether it's real gold or whether it's gold-plated tungsten or something like that, it has to be really checked. The gold has to be audited, and in the U.S. it hasn't been audited in a long, long time. And other countries provide more up-to-date statistics for their gold.
Some countries, is it fully transparent and reliable?
Well, nothing is fully transparent and reliable, obviously, and also because there are daily trades. So sometimes a country buys more gold today and then sells a bit tomorrow, and then buys even more the day after that. It's very hard to keep track of every ounce of gold at every point in time. But on average, I think that some countries are a lot more transparent than the United States. The United States is the least transparent, probably after maybe Iran and Venezuela.
North Korea, I suppose.
Well, I don't even know if North Korea has any gold, but probably.
Yeah, probably. Yes.
Probably. But yeah, these are not transparent gold holdings. Unlike, for example, Russia. Russia has been very transparent over the past 10 years in how much gold they're buying. They have published pictures from their vault. Their vault has a lot of gold. They weigh, they measure every bar. They also seem to have some silver in the vault. I don't really understand the purpose of that, but okay. And I think other countries, especially European countries, are more reliable in terms of reporting. Switzerland is a lot more reliable than other countries. Germany has successfully moved a large part of their gold back home because most of German gold was actually stored in New York, in London, Paris. And over the last decade, they have gone through a lot of trouble to bring their gold back home. Other countries also have brought their gold or some of their gold back home. The Netherlands is one of them. Poland is one of them. Poland has been buying gold as well. So I think that central banks see what's going to happen. They see the trends. They see that the economy is going into an abyss, and they know that gold is going to go up in value. And this is why they're storing gold. They're buying as much gold as they can. This is a normal reaction to what they see as something that's going to happen.
All right. Good. So tell me, do you hope that perhaps demand in gold will help to stabilize the world economy in the next decade, perhaps?
Well, I'm not really sure that I follow the train of thought. Demand in gold is going to go up, of course, but supply is not going to be there. And what that means that prices are going to go up.
Well, meaning in terms of anchoring the economy to something that is stable and solid, like the old standard that we've been discussing in the previous episode.
The problem with the gold standard is not the gold standard itself. The problem with the gold standard is government, because governments like to give something for nothing. They promise their voters something for nothing. And if they're on a firm gold standard, they are not able to print any money without coverage, any money without gold. So this prevents any promises of wealth redistribution. If you want to give some service to your people, you have to tax them, and that's very unpopular. If with a gold standard, without a gold standard, you can kind of stretch your money supply by printing a little, by borrowing a little, by doing all sorts of things to not actually show the population how much this is costing them, because it is costing them. Inflation is a tax. Many things are taxes. People don't see them as taxes, but they are taxes because there's no free lunch. So everything that the government does has to be paid by someone. And if you don't see who is paying for it, you are paying for it in one way or another. So the gold standard is, we always, as a civilization, over the past 3,000 years or so, we have always come back to the gold standard after a large financial bubble collapse, collapse or financial bubble pops. So we come back to the gold standard, but then governments start doing it all over again, and then we leave the gold standard, because usually the gold standard or the silver standard, it doesn't matter. Silver was money for longer than gold, for more prominent as money for longer than gold. But it doesn't matter which standard it is. Typically, in the beginning, it's 100% backing by precious metals. Then it goes down to less than that, 70%, 40%. You can see that in the Roman Empire, in their denarius coin. Early denarius coins were almost pure silver. And then as years went by, they were minting more and more of the coins, but the percentage of silver started to decrease, and it went down to 80, 70, 40, 25 by the end. So is it a silver coin if it's 25% silver? That's a question. So this debasement of currencies, it's not a new phenomenon. This is not something that
certainly not, yes,
that the Fed came up with, last week. This is a phenomenon that we have known about for literally thousands of years. This is not something that's new. This is something that we've all seen. This is something that people have experienced in the past, and the only cure for the collapse is going back to the real gold standard. And that gold standard is useful for a while to stabilize the country, but then after everyone regains confidence in the currency, which has been on the gold standard, then the government starts slowly weaning itself off of the gold standard, promising all kinds of goodies to the population. And then after a while, there's another crash, and then the cycle just repeats itself.
Good. Then I think that we covered some interesting aspects in this episode. I would like to say one big thank you for your time and your very interesting insights and information, as well as to our listeners who had the time to dedicate to this podcast. So stay healthy, and I hope that we are going to speak very, very soon. Good night, and thank you once again. Bye-bye.
Bye.